And I feel like what an individual or a group of individuals who are working on an idea or a business need is too many things to work on. I was just studying somewhere and reading this. The single biggest reason that startups fail or succeed is the time they go to market.
So, hi everyone. Today we have Mr. Jeet with us here, and we're very excited to have you, Jeet, with us. And thank you so much for being here. Just to quick kickstart our podcast, I would love to know, your approach, and if you could tell our audience how did your entrepreneurial journey start, and a little bit about your background and what actually motivated you to start One Finance and making it into such a big success that it is today, and it's growing at a very rapid pace. So we would love to know more about how you ventured into this and what was your motivation behind starting One Finance.
Sure. Thank you for having me on this podcast and this conversation. So my name is Jeet Marwadi. I'm a founder at One Finance, and essentially my journey, I guess, began quite early on in the sense that I always had the interest in business, and I realized, I mean, early on as well, that business is one of the ways where you can create impact, and create value for people. I feel like business is like organized, impact creating entities, right? If people with the right intent join and create something of value for everybody that's a part of it, not just profit maximization for owners, but also people who work at the company, people who the company serves, and the value that that generates. So that's a little bit about what I think about entrepreneurship and business in general. When I was, I guess, in sixth grade, I used to sort of make copies of gaming CDs and then sell it to my friends and extended group of people. Had a network of those. So I realized that I had an inclination towards it. I mean, it wasn't a magical sort of
Yeah.
uh, a skill, but I guess it's something that I've honed over a period of time. Talking about my educational background, I come with a economics degree from Loyola Marymount University in Los Angeles, with a focus in sort of behavioral economics as a
Yeah.
major as well. And in 2016, I graduated from university and sort of joined the family business in Rajkot. So Marwadi Financial Services, Marwadi University, and
Yeah.
of course now the group has evolved. So it's Marwadi Chandarana Group with
Yeah.
Chandarana family. So it's two families coming together and creating various businesses and sort of organizations. And so 2017, I basically joined both Marwadi University and Marwadi Financial Services, both being customer or consumer facing, you can call it, right?
Yeah.
And of course, higher education is very different. Financial
Okay.
services, we're still one of the top 25 brokerage houses in terms of active clientele in India even today. And this has all been sort of possible because of obviously a lot of sticking to the values and not, there is an inherent sort of alignment between the customer and the broker that exists, right? Because I benefit as a broker based on how much you trade, but they might not succeed at that trade. And of
Yeah.
course, that's, I mean, the customers who trade or invest are aware of that, but then there are actors at the middle level who then end up sort of taking it too far, working on targets for revenues and these kind of products. And I feel like that's where eventually I and the family and my co-founder Keval, we saw an opportunity to build an institution that has its sort of customers interest, at the best interest of the customer at the heart and core of its, not just promise but the business model as well. And that's why One Finance. So One Finance is a holistic financial planning institution, right? And we call it an institution, not a fintech per se, because we use technology, but we're not sort of a tech only company, right? We're in the business of people's financial well-being.
Okay.
And financial well-being again is a whole, it seems very complex to understand, but it's just how confident and peace of mind one feels with peace of mind with their financial standing and their future financial sort of capability and milestones.
Understood. So, like you said, you have a diverse experience. You were working with the Marwadi group, and from there, I'm sure you must have taken a lot of key lessons that you are implementing today at One Finance, right? So, what are these key lessons that every entrepreneur who's trying to get into the financial sector, and especially something what you are doing at One Finance, like you said, is a very holistic approach at financial planning, right? You would not like to be categorized as a fintech company only, but it's a very holistic approach that you're taking. So, what are the key lessons that you're trying to implement here at One Finance with your experience from, say, the from your vast experience that you've worked at?
I think being very clear on what the customers will benefit from
Yeah,
and how to provide that to the customer. And I mean, in India, it's a whole continent in itself, right? There are so many different sections and segments of people with different
true.
mindsets, with different interests, and I think the way we've been able to work around this, and what I could say from my experience to other people who are interested in building something in the financial services space, is that it's a massive industry, right?
Yeah,
And there is obviously a lot of opportunity, but at the same time, the barriers to entry are high. A lot of the startups whom and founders whom we speak to at One Finance, who associate with us in some capacity, or are interested in some sort of an investment in their firm, etc., is that this obsession with tech, but to solve all problems, is, I think, number one, incorrect sort of allocation or emphasis.
yeah,
The second thing would be that just thinking that you may be able to lure large sum of customer by giving them offers and sort of too good to be true kind of schemes. So schemes are a sure short way in product building or marketing or go to market, etc., to lose customers, I think, and not even acquire a meaningful customer. And third thing would be that really don't fully be convinced about all the reports that you read,
yeah,
being wary of their assumptions and their conclusions. Reason being, I was just reading a few reports, and I've been reading many reports, right? We all do. We get forwards, and we're interested in researching in the space that we're working on.
yeah,
They take a sample size of 1,000 people and
hmm,
extrapolate that to 100 million people in terms of consumer behavior. So this is a sure short way to failure, because if you're going to build your business on these surveys, right, and you haven't really understood the sample size and the impact and the sort of misrepresentation, right? A thousand, a
yeah,
0.0001 percent of sample size for 100 million population. So 1,000 people over 100 million population, that the report seems to sort of
true.
get uh, be conclusive about. So be wary of these reports. I think be very cautious in terms of who you listen to, what are their objectives, what are their real interests behind what
Yeah,
they're doing, right? I mean, we live in an information overload world, and we're hyper connected with information around us. So, how do
yeah,
we ensure that we um, are operating on information that are as close to the truth as possible? And that can only happen if you speak to people who are working in the industry.
yeah,
Ensure that you're speaking to them not from a very commercial angle, but you're speaking to them to understand the space a little deeper.
of
Um,
course.
while tech has enabled us to sit at home and dream up any product and build that product remotely from having teams across the country or even the world, I think the essence of what the customer is looking for is something that you'll only realize once you speak to them enough. Um,
Yeah,
even if it is, even if you can speak to. So, I mean, we appointed a market research agency, a global market research agency. Where we wanted to understand consumer behavior or investor behavior in terms of how they're looking to improve their financial health and financial status. I think the way that the survey was conducted, there was, the people who conduct the survey matter as much as the way that the survey is conducted. What
of
are
course.
their interests? Have they just received a job that they're supposed to fulfill and they're going to get some fees for it and some, charges for it, etc. So there's so many layers. I mean, I think the academic world, or the world of sort of theory, will make it seem like, okay, it's a sequential logical thing to do, but when you really understand the psyche or the psychology of how these things and these enterprises and these people who conduct this research operate, then you have to really take a step back,
Yeah.
ensure that it's not just an agency that you've appointed to do the research. I think be a little more conscious about it, in that sense. And I think, like I said, speak to as many people as you can. Of course, there will be conflicting, confusing sort of comments and remarks, but I mean, that's your whole job, right? Otherwise, if it was so easy, then many people would be doing it successfully.
Yeah. So, Jeet, like you said, you speak to the customers, you're very engaged to understand their point of view and what they're looking for. So, so is it only through that that you try to advise them around the planning for, their financial, portfolio, or how do you make it tailor made to their, to the customers' needs to the T? Because, financial planning is extremely crucial, and the customer is kind of depending on you to take their financial, like you're taking the reins in your hands and you're like, yeah, we will guide you through it. So something like this is of course very tricky, where a lot of reliance is also there, and at the same time a lot of responsibility is also put on one finance. So how is it that you're looking to tailor make the entire solutions that you provide? I believe, like you said, market research is one, and speaking to your customers, listening to them is of course very important, but are there other technologies involved or other strategies that you follow?
Yeah, sure. I mean, I think, we've done a lot of trial and error, and we know exactly what not to do, which has got us closer to what is right for the customer in terms of acting on the advice that we're giving.
Yeah.
To answer your question, the way we personalize the advice is, first we get a holistic and scientific understanding of the individual. Say, for
Okay.
example, someone like you are, say, early 30s, right? What sort of financial background do you come from? So we understand the individual a little more holistically, in the sense that, what generation are you from? So are you a generation 1 in your family, generation 2 in your family? India as a whole is in gen 2, which is
Yeah.
why we see the whole wealth transfer from the parents generation to sort of the kids who are millennials in this category, right? The early millennials. Um, so what we do is, we understand the generation profile, we understand the financial standing, we understand their money sign. So money sign is our patented sort of personality assessment towards finances, which helps us, which is obviously based on the most widely adopted personality assessment out there, and the framework is called Ocean Framework. So we understand you at a personality level, at a more financial sort of numeric level, at a economic and situational level. Like, what profession are you a part of? Are you someone in the IT services sector, or are you someone in the financial services sector, etc.?
Mm-hmm.
That deep understanding of who you are and how you operate and what your family background is and what profession you are a part of gives us a very good understanding of what it is that you require to continue living this lifestyle, right?
Yeah.
So we often say that it's lifestyle based financial planning, and it's not just planning, right? So you have to back up your plan with action and behavior. Now that's where at level 1, after we get all this information from you, we have a quantitative model and engine that helps us prioritize your action plan. So if you don't have emergency planning in place,
Yeah.
right? If you don't have 8 to 10 months of your expenses, your lifestyle expenses, living expenses, saved in a way that's liquid enough for you to access whenever you want to access, then that's the number one step.
Okay.
This might seem very basic, but most people don't have it. We'd be
Yeah.
surprised. And after that, what we look at is, say, for example, what are your aspirations? What are your milestones that you're looking for? Are you someone who is willing to work for a long period of time in a way that you want to you know you want to have your your lifestyle expenses being met by your active income, or are you
Yeah.
really looking at building passive income so that you can do more things with your time, so you have financial freedom, and then financial independence, right? So you're not really So what we mean by financial well-being, you're not dependent on your primary source of income where you work to
Yeah.
live the lifestyle that you're living. So
Hmm.
you're really free to make the decisions that you want to with your life, with your profession, because
Yeah.
otherwise logic will kick in, rationality will kick in. Oh, how will I pay my bills? How will I pay the rent? How will I move out of my parents' home, etc. Right? These questions. So you will be stuck to a job where you're not happy, where your potential is not getting maximized or fulfilled
Of course.
because you have financial obligations. Maybe you have a loan. So we look at in terms of your liability also, right? So we look at your assets, we look at your liabilities, we look at your cash flows, which is nothing but income and expense, and we look at your insurance coverage. Do you have the basic insurance coverage that you need? Is that the right amount? Are you paying the right premiums for it? Are you overpaying for it? Are you underpaying for it? Would you benefit from surrendering a certain policy because that's sort of not really working in your favor, it's taking more away from you? Will it be more prudent for you to prepay your loan and then get additional term insurance? So these are the kind of decisions that we then guide the customer through, right? And we hyper
Yeah.
personalize it. We're the only ones with the largest network of certified financial planners and certified wealth managers in India today
Yeah.
that provide this advice. And these advisors, these financial planners are not on our payroll.
Yeah.
So we say unbiased by design, right? So these
Okay.
individuals are independent. They are partners of the one finance ecosystem.
Oh wow.
So they give you advice. And because if you see, at a fundamental level, the banking industry or the broking industry, where the misalignment started to get exploited
Yeah.
is the sales teams were given targets and are given
Exactly.
targets to upsell, cross sell, and maximize revenues for the company, because
True.
that's how to manage a business, right? A financial
Yeah.
service. That's how it has been done. Now that may have worked early on where there wasn't that much penetration and the regulation took care of the worst case scenarios and didn't let those kind of products uh, out in the market for people to be exploited with or manipulated with. But today, with so many options, with a lot of excitement and interest also from the investor community, I think
Yeah.
people are chasing novelty, right? Whether
Yeah.
it's angel investing, whether it is sort of revenue-backed financing based invoice discounting instruments,
Of course.
etc. Fractional real estate.
Yeah.
We hear about all of this and we get excited. All of us do, right? We feel
Yeah.
like something new that doesn't exist will have something really interesting in terms of
Of
returns,
course.
etc. So we work through all of this, and we ensure that the misalignment of interest doesn't exist,
Of
and
course.
we only benefit when the customer benefits. So we have a financial behavior score that we have designed, which, just like a blood report, looks at all your financial vitals, so to say,
Oh
and
wow.
understands the various ratios that you're, whether you are say overexposed to a certain kind of financial instrument. So
Mm-hmm.
you feel like you have 10 different mutual fund schemes, but
Yeah.
those 10 different mutual fund schemes are invested in the same 25 companies. So your overlap in those 20 companies is 80%.
True.
And practically, for any individual whose full-time occupation isn't investing or trading, it's very difficult to
Yeah.
know all this information and act on this information.
True.
Um, so, I mean, it's a whole universe of things when we really talk about how we help the customers achieve financial well-being, and it's a journey, right? So, we
Yeah.
don't say you pay a subscription fee and then you keep coming back to us. Our focus is really no strings attached. You get the right advice that matters to you, understand it. So we are like that financial coach, even, right? Like
Yeah.
it's not just about buying financial products, right? I think
Mm-hmm.
that's another place where we've gone wrong in this industry.
Yeah.
It's not just accumulating insurances, mutual funds, FDs, etc. Now, if you're in a lock-in kind of an instrument for 5 years
Yeah.
and you're not able to manage your day-to-day expenses, what's the point of that 5-year investment when your today is not secure?
Of course. And I believe even now when I see the finance industry and when I look into it, it's more on, lending, collections and all of that side, whereas it's been so glorified, whereas that is something that should not have been glorified in such an extent where it has been. Like every other company you look at, lending has been such a big part of it, right? Whereas planning is much more important. That is not been given to and not been actually educated to in the youth that has also been coming about. So I also wanted to deep dive a little more with you on this. And how do you feel about lending and collections, part of the finance industry that has been booming, so to say? And how do you feel that that can be articulated much better by the youths that are coming in, by the companies that are taking such lending and financials, and how can that be managed in a much better way for them also?
So from the perspective of the individuals, the
Yeah,
investors,
yeah, of course, of course.
see, I think most important is for the individuals to be aware of what they're doing. I
Yeah,
think self-awareness is the number one key step. Knowing, what influences you. Are you really? I mean, we're all influenced by exciting, shiny things.
yeah,
It's just in the nature of how we are and how marketing has evolved, right?
yeah,
Um, and then there are so many businesses trying to sell things to you. So how do you ensure that you don't get distracted by them, because you're on an everyday basis, if we look at our behavior, we are consuming a lot of information, and that
mm,
information that we're consuming is funded by those entities or individuals who want to influence our behavior,
yeah,
uh, right? And whether that behavior is right for us or not, that's for us to really. So I think it's a lot of introspection that one must really focus on. Whether I need this personal loan to be able to buy an extra phone or a fancy phone, or am I? And I mean, you could want a fancy phone, and that's fine, but at least knowing that, okay, this is something that I'm indulging in, right? It's
yeah,
like eating that piece of cake or chocolate at midnight. You're indulging, so can you overcompensate for it by working out next day,
of course.
right? So on a day-to-day level, what sort of behaviors are you practicing,
Yeah,
and how do you overcome them immediately after, or I mean, compensate for them? That would
yeah,
be a very sort of general, psychology based and behavior based advice or insight. And another way to look at lending is, if it is used correctly. I mean, if you look
mm,
at businesses that are very successful, they use debt and lending very effectively, right?
yeah,
Even in the financial services business, I mean, the kind of bank facilities you are able to get, the kind of leverage that you are able to build
yeah,
in a risk optimized manner, is how you are able to in a cost efficient way acquire opportunity out there, right?
of
Because
course.
otherwise, I mean, lending and borrowing, are two different sides of the coin.
Coin.
So if you're borrowing, whether you're borrowing to build an asset that can generate income for you, or are
Yeah,
you borrowing to buy a car, or are you borrowing to buy a depreciating asset, right, or a liability? So that's something that one must be very aware of and sort of introspect about. Loan necessarily is not bad. I think it's good, if you're
yeah,
able to access it. I mean, credit cards are technically loans. Uh,
yeah,
and the credit card debt is growing tremendously in India today. India is a net credit sort of a market, because people have aspirations. People want to, have nice cars, nice watches, nice experiences, whether that is even going for a trip abroad or even within India. So I think these things are good for the country, because that means that people have the desire to live a fulfilling life. That's important for there to be, transfer of continuous transfer of value,
yeah,
and that's what we see in the GDP also, right? If people travel more, people spend more, then the companies will make more money, etc. So it's a virtuous cycle, but as long as you don't get lured by unnecessary sort of debt traps,
yeah,
very careful on what is it that you're getting the debt for, right?
mm,
For a home for someone who has dependents and wants to secure their family in terms of shelter, it's very good. Again, at what point, at what rate of interest do you choose to get this loan at also matters a lot,
yeah,
right? You can afford a loan worth 1 crores, but you're going out there and like stretching yourself and getting a loan for 1.5 crores. Now that's
Hmm.
gonna hamper your peace of mind,
Of course.
and at some point also sort of putting you in that position of risk where repaying becomes difficult, and then you take and then you feel trapped to your life situation, right? Like, how do
Yeah.
I repay this high interest rate debt when I've now purchased a very expensive home, uh,
Hmm.
which I did not afford. So that's why we started One Finance. We realized people will require guidance on these
Yeah.
kind of decisions, and someone who is genuinely attached to their sort of interest, right, and not necessarily focused on how much will I make from this transaction.
Yeah.
uh, so yeah, in that sense, I mean, credit card spending or even loans of consumer loans, or buy now pay later kind of instruments,
Yeah.
um, be very mindful about it.
Yeah. So, like I think the flip side of lending would be collections, right? What the company is doing. And a lot of people do not know that how collections actually work in India. So, do you have any insights on what are the strategies that go when, when the companies are trying to, get through with the collections? Because, we know we'll get phone calls and we'll get emails, but I'm sure there's a well devised strategies for collections as well in India, which people do not think about while taking up the loan, right? And it becomes obviously that's in hindsight, we'll look after it later, but that is extremely important, and that knowledge also is extremely important to be had. So, do you have any insights on what are these strategies that are being taken up by companies for collections, and how is it that that is something to be mindful about also when you're taking up such credits?
I mean, yeah, I mean, depends on what is the source of loan. I mean, if you're going with, informal sort of credit,
Yeah.
not organized, then the interest rates will be, 36, 46%
Touching the roof. Yeah.
around, and that's dangerous. Don't do that. In terms of collection, people use all sorts of methods to get money out of you. Whether that's shaming you publicly, or there's a lot of manipulative entities, individuals who are out there to, they're called loan sharks, because desperate, they'll come and give you something
Yeah.
which you cannot deny, and then you'll be trapped. Then they'll take your house from you, any sort of assets that you have. They'll take your family's jewelry, etc. So uh, I think, and the biggest sort of impact is not losing these assets, but it is losing the confidence on yourself to be able to rebuild, right?
Yeah.
And feel like, oh, I'll never be able to do something that I truly desire, or that'll be good for me and my family, because I've already, gone through this phase where I had to sell everything, and it's very difficult to uh, be able to take risks. So your risk appetite then reduces dramatically, because your perception within your community becomes, oh, someone who's defaulted on a loan.
Yeah.
So it's even at a social level, it kind of impacts individuals.
Of course. And I was reading somewhere, now coming back to our entire conversation about you being very involved in business and you loving the aspect of business. So I was reading somewhere where you said that innovation is not the only thing that requires a startup to work, right? And so I wanted to actually deep dive more into this. That what do you think are the key things that any innovation, any entrepreneur needs for their innovation to succeed? Because I believe there's an idea that you work on, you innovate, and that's how you grow. But I'd love to know more on what are the aspects that all entrepreneurs should also be looking at while working on their innovation. And just an idea cannot change your life. That is the thing, right? So what are the other things that should be involved and should be looked at by an entrepreneur in your expertise?
There are 75,000 registered startups.
Yeah.
There are 70 unicorns. And unicorns are not a sign of success, right? They're just a sign of scale and valuation.
Of
So
course.
what I think there is that success is, in the 0.1%,
Yeah.
and excitement to begin or do something is, of course, at 70, 80%. So that ratio of successful startups, the probability of successful startups and companies are low.
Yeah.
um, and I feel like what an individual or a group of individuals who are working on an idea or a business need is too many things to work on. I was just studying somewhere, And reading this, the single biggest reason that startups fail or succeed is the time they go to market, right? So I mean, out of all the other reasons, of course there are all other reasons have to be there. If you don't have a good product that people want, if you don't have the right pricing that people are willing to pay you for, I mean pay for, if you don't have the right sort of investors and backers who will understand the business in totality, and support that and continue to support that through good times and bad. There are so many reasons because of which your business idea may not succeed, right? um, the team that you have, the talent that you're able to work with, and all of that, the regulations that you operate under. The regulation can completely make your business irrelevant overnight. So, knowing all of these things, improper financial management also, right? Like you had raised some capital, but then you overutilized it, and you know you overplanned, for example. A lot of things tend to happen, right, and tend to creep.
Yeah.
So I don't think there is a single thing. I think too many things need to align, and that's why the success rate of startups are very low. Because you need the right time to market, you need the right product or service, you need enough number of people to like it, want it repeatedly. Uh, you need the right regulation. You need consistent uh, uh, feedback loops within your service or solution set, so that you keep improving, eliminating what's not working, rethink certain new things, ideas that you're developing, and adding on to your existing capabilities. So uh, it feels like a black box, and it'll
Yeah.
be too limiting to say an idea can change your life, or persistence is all that matters, and all these motivational quotes. But I think it's a combination of many things, and it
True.
really depends on what your starting point is, who you're building this with, what are their intentions. And
Of course.
honestly, it's a very personal, introspective sort of more than commercial. Of course, commercial sense, business sense is equally important.
Yeah.
uh, but another factor that I can think of is thinking that you can manipulate or fool the customer to sort of thinking that just because you're building a product or service, people are not smart enough or aware enough to just buy into your promise and do something that you expect them to be following because you've given them a too good to be true offer.
Yeah.
People are not especially users are not fools and don't think that you can oversmart or outsmart customers. uh,
Yeah.
you know so that's why you see apps with dark patterns, right? They make onboarding so easy, but then exiting that investment so difficult and full
Yeah.
of friction.
Yeah.
So these things customers can experience and see, and then it's a short way of not building something sustainable, right?
Yeah.
So what is your intention? What are your objectives for yourself? I mean, do you wish to build a lasting organizations, or do you wish to build a product that you can sell, or are you building to build your own wealth and sell the company to someone? I mean, there are various
Huge.
objectives, right? And so that's why the life of the organization really depends on the expectations that you sow in the business that you're looking to create.
Of course. And, I believe each industry would also be like industry specific obstacles, of course, do come in, right? And like you were in the financial planning services, I'm sure there are many obstacles that you would be facing as, an entrepreneur yourself. I mean, what are the challenges that you face in the financial planning services industry? And while you're running One Finance, what are the most, challenging situations that you face personally during your time as the founder here?
Many challenges. Of course, not many people know this, but the first app that we built was completely off expectation, so we had to scrap that. We ended up losing time and money.
Yeah.
So the whole first app that we built, many failures, right? So this was one of the largest examples. We're probably on our 10th version of our website, and we're still figuring out what works for the customer, whether they're able to understand what we're saying, whether they're able to connect with what we are saying. Because ultimately, the customer understands their need,
Yeah.
right? And whether you can fulfill that need in a way that they are okay to continue with. So it's the customer experience and the customer, right? They
Yeah.
don't really look at what are the functions that you have, whether you have a HR function or a quant engineering function or an AI function. They just look at whether they like it or don't like it, and they
Of
find
course.
value in it. Other challenges I would say is sort of explaining to people, what is the value in holistic financial planning,
Hmm.
because in India we're so used to this behavior of buying more financial instruments, whether it is stocks or whether it is mutual funds or
Yeah.
whether it's insurance, that assessing whether we are going in the right direction or not is something that doesn't come so naturally to us.
Yeah.
um, We're in the business of delayed gratification, right? So you're not going to see overnight returns, right?
Yeah.
You're not, I mean, a half a percent or a 0.3% return on your portfolio over a period of 10 years is not going to make that much of sort of difference to you.
Yeah.
It's really this obsession with returns. 90% people do not even continue with their mutual fund investments beyond 3 years. And the basic mutual fund investment life should be 5 to 7 years for you to really benefit out of that, right? Because in the market, if it's market linked, which is mutual funds, there'll be drawdowns, there will be corrections. So until unless you ride that business cycle, your investments are not going to be useful for you,
Yeah.
right? I mean, so if you are over invested in equities, over concentrated, and a bad event happened and the markets are down by 30%, something like COVID, of course, that was once in a century kind of event, but that happened. Many people realized that I had too many of my eggs in the same basket.
Yeah.
I had a loss of pay because I wasn't able to earn from my business or from my company because I was laid off, or
Yeah.
they reduced the compensation, and my investments and my savings were stuck in equities, and they were at 30% minus, and that means even my capital was lost, right?
Yeah.
To some cases. So uh, this is another challenge, that people want instant gratification, but the real value is in delayed gratification and building good habits. Like anything good for you in life, right? Like for all of us, like health,
Yeah.
sleeping early, waking up early, not eating late at night. All of these things we all know, but it's so difficult to do, right? Because it's boring, right?
Yeah.
Because we're labeled as boring. We feel like, oh, we don't go out, then our friends won't like us because we're not drinking out, partying with them.
Yeah.
So it's boring. Success only comes to those who are okay with being boring, and that's the biggest challenge. I feel like at an organizational level, even customers for themselves, right? They have everything. I mean, the average income of our customers is around 35 lakhs per annum. So they're in the top 1% of income bracket in India,
Yeah.
but yet they are not financially sound because of various reasons which we've discussed earlier on as well.
So, what are these financial habits you would say that people should start even looking at or inculcating in their day-to-day lives? Like, what are these habits that we often neglect? Because I think a lot of people do not even have that awareness
Yeah.
that that is something that we're doing wrong. Because a lot of people are, oh, we're saving this much of our salary. I think that should be enough. I mean, that is how the approach usually goes on to. So, what are, according to you, the financial habits that we should be actually taking up, like our listeners should also be looking at to begin with?
So, firstly, I'm not going to give you those five magic tricks that will help you become a millionaire, right? Because I'm not an influencer. But I think number one, most important for each individual, those financial habits will change a little bit. And that's the whole reason why this business can't be solved with tech,
Yeah.
because it's not just a calculation, it's
Yeah.
also a personality. Now, for someone who is extremely energetic and enjoys adventure, for them spending 20K extra on travel on a monthly basis is okay,
Yeah.
because they feel satisfied and they're happy with it, right? Like, and your sense of happiness is so important to your day to day, because that bleeds into your relationships, that also sort of spills over to your quality of work or your productivity, etc.
Yeah.
Some basic things I think most people know now. Like I said, don't definitely do not invest in any asset class that you don't fully understand. Don't chase fancy investments. for
Yeah.
example. Don't chase investments that are not regulated, right? Only if you feel like, okay, you really want to gamble and you feel like you want to try something, then set aside amount of money to that you're okay to lose. um, Asset allocation, most people don't understand or give enough value to effective asset allocation, like I was mentioning. Having multiple fund schemes doesn't mean you have a diversified portfolio.
Yeah.
uh, Understanding who you are listening to for financial advice, whether that individual is qualified or not qualified. What does qualified mean? Are their interest in, are your best interest in their interest also?
Yeah.
Whom we are asking financial questions to, right? Are we asking it to someone who seems wealthy or who seems to know what they're doing? Of course, you can do that, but might as well get qualified advice from someone who has the training and the experience to help you holistically, right?
That's true. Yeah.
Um, a lot of the times, so I'd like to draw parallels with, fitness or health, because it's the closest in that sense. If you only have a trainer at the gym, then nutrition takes a hit. So
Yeah.
we all know how important your diet and your sleep and your recovery and your is for your health as well, right? And your level of stress. So how do you ensure that you have all these pieces right, and
Yeah.
sort of don't overlook any? So asset allocation, not taking debt for liabilities unless it's very thoughtful and thought through, and this is important for you. Like owning a car with, is not a bad thing,
Yeah.
right? Not looking at it like that. Otherwise, you'll question every financial decision in a very negative light.
Of
Uh,
course.
Having enough savings in a liquid form, even in your savings account, for 6 to 8 months of your day-to-day fixed costs or expenses is very important, right? Health insurance is something that you must essentially have.
Of
Uh,
course.
Fixed deposits are not a bad investment, right?
Hmm.
As long as you don't have 100% of your savings in fixed deposits,
Yeah.
you know. So I think these are a few things that you can inculcate and be aware of.
Okay. And one last question I wanted to know. We've spoken about technology also. How is it that you at One Finance are leveraging technology also to take the product forward, and how are you using it to even build One Finance in the future, and what is it in store for One Finance in the future, and what are we going to see with you doing forward with it?
We use technology quite a bit actually, for not liking to be called as a tech company.
Yeah.
Reason being, so we use transcript I mean AI models for our transcripts based on consultations to help us flag any negative comments that the advisors may have made, in
Yeah.
that consultation. Um, because there are so many consultations. I mean, 65 to 90 minutes of consultations on a daily basis by 100 advisors across 100 customers, again, is
Yeah.
something that we can't do manually. So we do it to ensure efficiency, ensure that quality control happens very effectively, right? Then we use, I mean, quantitative modeling to come up with recommendations. The first level of financial action plan that you get as a member is from a quantitative, numeric model that we've built. And I think we will only start adding various layers to it once we have enough number of customers on which, machine learning will start to make sense.
Yeah.
Uh, right. So we use tech for what it is best for, which is reliability, delivery of information or advice, or quality of advice, um, quality control, like I mentioned. And we continue to see that we will improve the use of technology. I mean, we use the large language models to a great extent, right? We have a customer service bot that uses a wide range of information to give the exact information that the user is looking for. We empower our qualified financial advisors with all the tools that are necessary for them to advise effectively. So we use, I mean, we have a operating system. We call it the enterprise operating system, which our advisors use to consult with members, where their financial information is mentioned, and then they get a report immediately on that tool itself. So we use it to make the whole advising and consulting journey simpler, easier, and quicker, and
Yeah.
also more effective.
Understood. And lastly, Jeet, I'd just like to ask you one more question. Is that if you could just help and elaborate more on how your challenges and opportunities that you've faced as a third generation entrepreneur, and your legacy coming from the Marwari family group, and taking it forward also. What is it that you would like to impart to all the new age entrepreneurs also, and how is it that you are handling this beacon also, taking it forward as a third generation entrepreneur yourself? How is it that what are your challenges and opportunities been like for you, that for you?
I think I've had a great sort of platform from the family, right? I've been extremely fortunate to have access to organizations in India in this era to be able to understand, from behind the scenes what makes a business successful, and what makes a business successful continuously, sustainably. So I've learned some very good sort of timeless values from the family. Like I said, never try to fool the customer. Never try to lure the customer into something, just for your own benefit. Always, I mean, we don't talk about Marwadi Financial Services as much, but we have zero budget for marketing, and we still are, top 25 in terms of active clientele, right? And we have the lowest complaints on the exchanges or through on SEBI's investor, grievance platform, because we've always worked in the best interest of the customer and the partners that have associated with us. And having this platform also means you have greater responsibility, right? Because you have access to capital and a team, and access to the industry. I think it's equally challenging to build something of value, uh,
Yeah.
because you realize that you have been given so much in terms of access, in terms of guidance, in terms of mentorship, that you must do something with it, right? And your only goal then becomes, how do I use this to benefit more and more people? So whether, I mean, there was no compulsion for me or the family to start One Finance, right? It became a very natural sort of progression for me as well, because it was such a big opportunity
Yeah.
and such a big space. There are very few people who really understand this and can back this with the right sort of advice and funding and team and people, right? And so, as a third generation, I would say it's challenging, but then all realities are challenging in its own ways, and all people have their own sets of limitations that they're trying to overcome. Um,
Yeah.
Managing various family members who are also part of the business is a challenge that you must, one who's a part of a family business ecosystem must overcome and deal with. At the same time, there are a lot of benefits, right? The kind of trust that you get from your family members uh, is amazing. The kind of professionals that join you because they know that you have the right sort of family values, and you've built organizations across various industries, and your track record is so clean and so positive that people feel like, okay, if they associate, then they will also benefit from that, and them
Yeah.
contributing to that also is a great thing, right? Which is growing the group of people who resonate with the values and the sort of method in which one operates. And I think a lot of it is your personal journey, and your family has a big role to play in what they expect out of you when they come from a background of successful
Yeah.
businesses, right? Because they can be overbearing and say, you do what I tell you to do because I've done this and I'm successful, so just listen to me. Or they can
Yeah.
say, build your own senses, build your own sort of
Journey.
journey, and then we are there if you need us.
Yeah.
So it really depends on your personality, but uh, I think what happens is, since the next generation is always much younger, the excitement to do something that's relevant for their time is always very high, right? So I would want to build a business that resonates with people of my generation, not
Yeah.
necessarily people like me, but people in that age group who I resonate with in terms of our values, right? So each generation has its own expectation. So how do you find a balance, if there is a balance that can exist? Sometimes you have to operate in exact opposite ways in terms of how you build the business from when
Yeah.
how the business was built by your families.
Yeah.
Uh, and if you're operating in the same industry as your family is operating in, but something new or very different in terms of how you build it, then obviously there will constantly be a lot of debates and discussions. But I think if the core objective is the same, and these are good sort of discussions and challenges to have and overcome. You know.
Yeah. Yeah, thank you so much, Jeet. I think it was great learning experience for me personally also, and I think for every user that's there, because we see financial sector as a very touch me not very risky sort of a factor. But then I think today even I've been educated a lot about financial planning, and definitely I'll also personally delve deeper into this sector and try and understand my own finances much better. But thank you so much for grateful insights, and I think we've all taken a lot from you here. And any last comments if you'd like to part with us with we'll be happy to
I
listen.
guess, thank you so much for having me as well. I had a good time chatting about this. I think one last thing I would like to say is that any working professional out there, if you are, working full time and are feeling a little, unsure about where you are financially, then do consult a qualified advisor, right?
Yeah.
And I think be holistic about it. Don't get carried away
Yeah.
by, distractions that may seem so good to be true or exciting, because if you're not just chasing that extra return, you're chasing a good life. So I
Yeah.
think remembering that, and also spreading the word about good habits and not being afraid of being boring.
Yeah. Yeah. Thank you so much, G. Thank you. It was lovely having you and lovely chatting with you today. Thank
Thank
you.
you, Tanika, and Legal Pay team.